Good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, I am one of the greatest analysts that you'll ever meet in your life, Mr. JD the Great. So we got a lot that we got to cover. Now the funny thing, what it do, Rod? We got a lot to cover. So one of the things, partly I'm doing this because I ran late as far as recording my video, and I won't get my edits on time. So let's go right through the chart. Oh, actually, before we do that, don't forget to hit the like, subscribe, and the bell button. And what I'm going to do on the first of the month, that's what I was going to say, right? On the first of the month, what we are going to do going forward is get you ready for the month. So there's going to be a live video while the subsequent videos are going to be all recorded, and there's a lot. I'm telling you, there is so much to relatively cover, especially with these new highs and what is going to be the plan going forward. Also, what I'm going to give y'all is a couple of trade ideas along the way, so that way you can be relatively prepared. And last but not least, I'm going to give y'all a nice little intro into what I got going on the other side. So it's going to be fun. All right, so without further ado, let's go ahead and get this thing cracking. So on my screen, what I have right now is basically everything that happened towards yesterday. If y'all remember, I kind of had this up until July 30th, and I felt like this was going to go ahead and hold itself down a little bit. I think the reason why my arc didn't really work out was because there was a lot of momentum to this upside, and there was nothing they could do to kind of curl this over. So I still have my opening range from yesterday up there, and then I also have what could be rejection points from yesterday's rejection. So we got I'm sorry, Rod. I apologize. I know I ain't trying to give you bad news. I'm just saying that this retracement needs to hold. That I'm trying to give you're not with the sad face. I'm trying to give you something to kind of stand on. So let's get deep into it. So the first problem that we have is that these was very tiny candles. And when I mean tiny candles, if we go over to April's complete bounce, right? We got bounces that this was like 2,000 points by itself. This one right here on this drop was 1,000 points. So not saying that this is its average. And if you ever want to know what the average movement of a ticker, a very good way of doing that is using the ATR, which is something that's built in. So let's go ahead and show you what that looks like. So the ATR at the time of this bounce was only 844. So we were exceeding the average trade in itself, as and you can see it right here down here in this bottom, right? So we're way past the average 844. So when we were going throughout this whole entire thing, you could see 844. It was just dwindling down, dwindling down. Now I got to like the 400s, 412s, 300s, and you can kind of see we kind of teeter-totter a little bit between 300s, and when we got to those new highs, it went down to 200, 250, 252. There's no real price action to be able to get that move. So you're like, well, JD, you're kind of giving us a lot of information here. Make it all make sense. All right, let me give you another example. So when we kind of had this drop here, right? This is this drop that kind of went down. This is February, and I'm going to compare it to December, right? So in December, right, massive drop. Let me put you over here. Massive drop. This was a drop of 845 points, right? Just this one right here. The average at the time was 345 on the ATR. So this kind of tells you for the past 14 days, this is what it says, like past 14 days, the ATR was 345. We exceeded it and doubled it and then some, right? And then when we kind of go over a little bit, you kind of see it stays around that 3. It kind of bounces up to the 4, and it just kind of, goes back and forth, right? So 3 to 4. When we get over to here on this February drop, right, we had a massive drop of 475, but this massive drop was 475 with 366 on the ATR. This is another example. So we were just literally dropping off of a cliff, but the ATR kind of stayed around that fours and everything, and we got a little bit of fives, and then it goes back to into the fours again until we got into April where everything started to shoot up again, right? So what does that all mean? It seems like we're not getting a lot of price action in here. If you're a day trader, you want ranges. You want enough space for you to be able to make money, right? So when you have a ATR, which is right around here, pay attention to that, and we get up into these price actions here, this only moved 52 points by the end of the day, right? But the ATR at that time that was dropping off was 255. Go to the next day, 247, and we only moved 61, and so on and so on. This was one of the biggest ones that we did. That was the news after Meta and Microsoft earnings, where it was 209. The ATR was leaning at 252, and then we had our massive drop off yesterday of 332, which is ATR 274. So the ATR is getting bigger. So now we're getting bigger candles. This could be a lot of things for you to unpack, right? For you to unpack is, could this be sellers finally stepping in? Could it be buyers that was at the bottom that's starting to adjust their position? That's a lot of profits, especially if you held it since April and you had enough time to hold it all the way up until this point. You're going to take something off the table by now, right? And there's another reason. Maybe the trend looks exhausted, and that's the last one I want to kind of bring up, right? So let me go ahead and get rid of this ATR. Let's go ahead and bring this up, and let's minimize that. So is the trend over? Is it exhausted? Is it tired? Now, if you haven't been in one of my classes, first thing I teach everybody is what is a trend. It's the most important thing. No, trends are not that. I wish it was. It's literally these going like that, right? So you want to find your higher lows and higher highs. So the question is, when we were making this trend from April, did it do one of these type of things where it was just straight up? Or did it do one of these kind of trends like this? That's the golden question. So let's go look at it, right? So this is my trend line, and we've had multiple deviations throughout, but those deviations got destroyed, especially the consolidation that kind of gave us this. And I think I warned y'all before, we're getting a rising wedge type of action here where we're not making higher highs with strength. So this thing can fall at any point, but that's over another conversation. But you can see this would be a high low for a high low, high low, high, right? But it's just way too vertical. We're going way too straight up, right? So the question is here, okay, if that is the case, where do we have our pullbacks? So I've had some discussion with good friends of mine. I do think this order block is going to be key. When I woke up this morning, it was like 23.66. We're already doing a 40-point pop-up right now, just to kind of give you an idea. Another area that could be very interesting is the place before we dropped off, like maybe December, maybe February, and Rod's probably like cussing me out right now, but it's okay, Rod, I understand, right? These two areas is probably another spot that they could be waiting for. The question is, where is our higher low? Where is the potential for a key pivot? And I'm not saying that it's going to come down to these levels. We might be just making higher lows right here. Maybe this is the actual trend. But the goal behind here is to kind of plan everything out, understand what we could be looking for. We might come down to the bottom of this level, and that could be around 22,835. That's the goal. He said loudly, I apologize. But yeah, so if we get this down to this level, we probably could get a healthier pullback. Now, here's the fun part about pullbacks. If you've never studied Elliott Wave, take a book on it. It's a very interesting theory. It's not anything that's set in stone, so I wouldn't hold your breath to it, but it is something that is used by many traders. So let's assume that this is the whole entire leg. Our 236 will be all the way around here, which is kind of similar to what I was just saying. Maybe we come back to this level. But let's just say this was more healthier than that one, and then this is the move that they are going to be relatively testing somewhere around here. All right, now that's my order block at that 236. So we're taking this whole entire leg, 236. Maybe they come back to a 50%, which lines up with right here. So there's a couple of questions that needs to be answered, And if you're patient enough and just wait for the setup, you can get yourself some really, 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 really good moves when this finally makes its decision. Again, all these levels are speculative. It's a if then type of setup. And if it does follow suit, then we'll follow suit with it. If it doesn't, we're going to adjust accordingly. That's all. Nothing more. All right, so let's go ahead and get to the tickers because I got a lot of stuff to go on. That's why I came in early so that way I can get through all of these. All right, so first thing here is this. We got ourselves oil. I warned y'all. I'm just letting y'all know. This was a rise up. I get it. I know y'all like y'all oil. Y'all think this thing is supposed to be going up. No problem. But this downtrend has a conversation to have with it. So I won't be surprised that we get into more of a consolidation wedging type of action here. And then it rejects over at this level. Normally oil pushes up during the summer. We're getting to the tail end of the summer, or maybe more like midpoint. I would say probably September will be more towards the tail end. So most people are done traveling. They're going to come back home to their families, and oil prices are going to start to cool down. If you don't understand seasonality, as a trader, as you go through the years and you get used to tickers, look at the climate, the market surroundings, the timing of everything, and you'll get a better understanding of that. But normally summer makes this spike, hence the reason why we had a spike here. And if we go to last summer over here, you can kind of see there's a spike here, and so on and so on, right? Here's our spike. This one lasted really, really long, right? So just kind of keep that in mind. So I don't think oil is going to break this area. I don't think they're going to get through this block. I do think that we're going to get some lower prices before it goes higher again. This is gold. I still believe it's inside of its bullish wedge. I don't think it's over yet. I think they are taking their capital out of the market to see how much retail traders they can trap in one direction or the other. If they can recognize enough liquidity, then they'll make the move. If they cannot, they'll go find another price to kind of trap those that don't know. So right now, I think they're mostly trapping bears. I think people are thinking, well, gold's been running all the way back here from October 2023 and also October 2022. If you really look at it from that 1600 or so, it basically doubled in price. And that's a fair assessment, but to be honest, it does not mean that we're just going to go ahead and pop up from here, because again, this bull flag is being built off of the muscle of this whole entire move here. So we'll probably get into that 4,000, maybe 3,500, but it has to break out of this top. It got to grab liquidity. Here's silver. I chart silver just to understand gold, and right now it's still dropping, hence the reason why gold's price still holding this pattern. Until this one starts to trend up, you're probably not going to see gold push up. Here's the British pound. Almost done with that whole entire head and shoulders. For those that took this play, congratulations. Don't say I never gave y'all anything. Nice solid head and shoulders to the downside. And then now we're getting a 50% bounce. Can this give us continuation? Yeah, possibly, but it needs to break under this 200, and you can kind of see this 200 will probably be a tough area, so we'll see what happens there. For the month, I would say no. I don't know. I don't think it's going to get to 200. I think it'll be dangerous territory, and they'll be reversing almost all of 2025 in April 2025, which can be very dangerous for a possible bear market. But, well, that's a whole nother conversation. We'll leave that alone. Bitcoin is back into my range. Like I warned y'all before. I know y'all Bitcoin bulls are probably pissed at me. That's okay, and I don't care, to be honest. But if you look at this, we tested it, and now we're on our second test. They're coming for this imbalance. The question is, how much bulls are still left in here that wants this upside? Remember, everything is different than your normal Bitcoin. There's people that are now allowed to invest it from your grayscales and all these ETFs, and banks are getting into Bitcoin, all of that stuff. So the identity of Bitcoin is going to have some little nuances. Pay attention to the details. If you don't understand fundamentals, I don't have my one-on-ones open right now, but just keep the link. When it pops back up, we'll break that down even further. But I will tell you this right now, this here, it's going to go ahead and really put some pressure here. I'm not saying it's going to fill this fair value gap. I'm not saying that Bitcoin is going to get to 112,000. Not saying that. I still believe it can get to 125,000. That's too much of a psychological level, and too interesting for traders to get into. But that 120 level has brought a lot of bears. So if that 125 is going to be anywhere near that, it needs to find a place that bulls are willing to buy. Maybe consolidate until we get close to this trend line, then get the reversal. So let's see what the middle of August, maybe I should put a vertical line and see how that pans out. Somewhere in the middle of August, let's see what the market does with Bitcoin. All right, let's go ahead and get into the Russell. Again, I wanted them to pour into the Russell. They're basically taking money out of the Russell. So now this kind of brings back my thesis. I thought tariffs was going to go ahead and affect international players, your Nvidias and everything else. They're still making new highs. So now we're in a new month. People that are in the Russell and they probably poured into the Russell towards the end of the month, they're taking their profits or stopping their losses because it doesn't look like we're going to get to this 2,500. It did look promising, especially with this inverse head and shoulder that kind of looked right here. But when we came to this order block, I call them jambalaya rice order blocks, where we got some greens, some reds, some yellows. So we got trend lines, we got smart super trends, all types of stuff. We got everything in here, and this thing was not breaking this level to save its life. And right now the range is pretty wide. I like this area right here because I think if it gets above it, this thing flies. If it gets below it, it drops something relatively vicious. All right, so let's finish up. And now here is the infamous dollar. This is a W on the dollar, right? This is screaming saying we are going to drop the market. If you do not chart the dollar, at the very least, please chart the VIX. These things give you a little bit of a confluence and divergence on what's happening with the market. This W showed up since July 28th, letting me know that the market was thinking of dropping off the market, right? So now when we confirmed this close on the 30th, I really thought, I was like, well, maybe they're just waiting to the end of the month and then that's when it's going to drop. And this was a perfect example of that. Fine one, the dollar. Some people use gold as one, but I don't like that. So dollar, VIX, those two, they really tell you a lot of the story. So I think it will get to that 100.537 and then drop, because based on seasonality, August is usually normally a bullish month. So I'm going to be very curious on its reaction when it gets there, because if it does, then we probably could get a nice little reversal on here. And I do feel like they came up here just to drop it a little bit lower, because why? This thing's been put in a bullish divergence since the beginning of July. Yep, it was warning y'all, and that's why I adjust my positions accordingly. All right, so let's go ahead and get into it. Go ahead and pull out a pen and a pad. I got the news for y'all, so let's go ahead and get this part done. So why is the market moving? So let's start with the economic calendar for the most part. You already know, we already had from yesterday, we had jobless claims, personal income, Chicago PMI. All this was having an effect, but I think this is the main reason why we dropped. This was a heavily bullish for the dollar. It does not mean that this is oh my God, it's not indicating that this is going to be the same report at 8:30, because we got non-farm payrolls. I'm trying to think of the indicative. Yeah, that's the word I was thinking. Indicative. I don't know. I kind of fumbled that word for some reason. Anyway, right. It's not indicative of this report here, because this is also a jobs report, but non-farm payroll can do major moves inside of the market. So I'm very curious on how this reacts to the dollar, because we got nice bullish on here for the dollar, and that's why that push kind of happened. So if this comes in bearish, and it's in my opinion, because it's a monthly report, it has more weight, more bearing to the market, I will not be surprised that this is going to be bearish for the dollar and really start to push this down. Again, won't be surprised. If it still shows bearish and the market reacts as if it's bullish, the market's going to do what it is. This is supposed to be just a guide. Do not take it to heart, but it gives you good analysis, so that way you can know what reports usually does and what type of volatility that comes with it. So just to go through it, we got non-farm payrolls, unemployment rate month over month, average earnings. All of this stuff is going to tell us a lot about the market. After that, so you'll think that you're going to get jabbed in the throat and you get the normal market when it's done. No, It's the first of the month, so a lot of new reports are coming out, like Michigan sentiment. This one it can really throw this market into a tizzy. If the market is bearish on the dollar for unemployment, but then it's bullish for the dollar because of sentiment, guess what? They could take the Michigan sentiment as gold, and then it just takes off. It's about the consensus of the market. We are just tiny fish on this little pond called the market. Just follow suit with the trend and you'll be fine. Just keep an eye on those because you might be in the wrong position. And at 10 o'clock, this thing is going to do something very interesting. Let's just do a quick recap of what next week's going to probably look like. On Monday, there's barely anything. Of course, normally Mondays don't. There's factory orders. But I don't think anything like that is going to have an effect. Let's go over to Tuesday. We're going to have some import. We're going to get balance of trade. That's going to have some effect. We're going to get some global PMI, services PMI. We're going to get a 52-week bill auction. That's going to be another key one. So keep up with your bonds. If you don't check out bonds, I would say keep them in your radar. We're going to get some mortgage rate information, especially the fact that Jay Powell did not lower interest rates. So that's going to give you a little insight on housing. Of course, oil inventory is going to have a nice effect. So look out for Wednesday next week. 17-week and 10-year note. Another large bond that can throw the market into a tizzy. If the market starts to get out of equities and start throwing into bonds because they get better interest rates, they'll do that because it's easier. They can park it. It's set, and they don't have to worry about it. So just keep that in mind. What else we got? We got Thursday. We have jobless claim, and we got used car prices. Actually, used car prices don't really have that much of an effect. It might affect Carvana, if anything. I still don't understand how that ticker is still moving up. We got mortgage rates. We're going to get consumer credit change, the Fed balance sheet. You already see what happened with yesterday. The Fed balance sheet was released, and Friday should be muted. I think we should have everything front loaded. Yeah. So yeah, Friday is going to be very muted. So we're going to get to our regular Friday. Friday's last activity is only because it was the end of the. I'm sorry, Thursday's activity was because of the end of the month. Today's activity is going to only because it's the first of the month. So this Friday activity will not be replicated on next Friday. It's probably going to be very low volume after 10 o'clock. So that's what I wanted to point out. All right. So since we're doing this live, I did not grab all my news, so let's go ahead and see what's the top topics over at CNBC. Like I said, I don't look at CNBC as the end all be all, and I don't think you should take any of them as gospel, but it's going to be one of those things that you want to get a gauge. If you like Bloomberg, by all means, go ahead and run with that. If you like, I don't know, your local news, go with that too. But CNBC has a tendency on doing the opposite, so I always play the opposite of what I see in the report. Yeah, this is okay. I think I got two good ones for y'all. Yeah. Man, that is funny. Actually, you know what? For giggles, let's go with these two. All right. I saw three, but I'm gonna go with these two. So the first one is this: Apple delivered on earnings that beat expectations. Here's what analyst has to say. Look, I don't care what analyst has to say. Look, did they beat earnings? Yes, they did. Was it solid? Debatable. So we got 9%. Oh, thank you. We found an extra $4 billion. That's a good sign, but you're a large cap. You're supposed to do that. I could imagine that their free cash flow is probably solid. I wonder if I can see their entire financials. Let's see. Is their free cash flow up? Quarterly, second. Okay, perfect. It's here. Okay, so let's see what their cash flow looks like. So you're losing free cash flow. That is, I'm not a fan of that. So even though you found an extra $4 billion, that means you can't put it into free cash flow. So what's happening? What are you doing? Are you investing in that foldable phone? Whatever. So Apple is not looking like the greatest ticker out of all. Ever since the December drop off, I've had lots of questions about this ticker. And if you don't know, I am an Apple fan. I have everything built on Apple. I like my Apple. I wouldn't hate to talk smack about them. But this was a solid bump and run to kind of break out of this area. Let me go ahead and adjust this line because that's what we're doing now. And this bump and run did not actually give all the way to this level. I think there is the bears were stepping up in these areas, right? Hence the reason why it's been held down, and it could be because of this 213 level. I was telling a lot of people 213 is a key level based on my research and history of looking at the stock. Because for some reason 213 just pivots, and you could see we got a nice explosion here, here, and then right when we got to here was roughly around that 213, 211, and we bounced again. So I was looking forward to close above there, especially after all of this consolidation. You got dividend drop-offs, that didn't help. Lasting earnings drop-off, that didn't help. All we have is a 200 psychological level, which kind of ranged as far as 193 to so, and that's the only thing that was holding it up. If all of these people that stepped in during April bails on Apple, this thing's going to drop down, touch my 800, and probably go deep into like 162. Not saying I want to see it there. I'm just saying right now, pre-market's at 211, and even the pre-market is having trouble holding 213. So based on those parameters, I think analysts is probably talking about it looks amazing and this, that, and the third. And all that negativity tells me that they are trying to find ways to do the opposite. Because again, buy the rumor, sell the news, right? So if you want to go check out what they're thinking over there, go ahead and see that. I don't even want to care what they're seeing. I'm just going what I see in the chart, and we're running from there. All right, next one. It is this. Josh Brown says AI is bailing out most of the U.S. stock market. That I can relatively agree. I think the AI space has been shooting up. Let's run through some AI tickers, right? So we got NVIDIA. I'm not going to go into the quantum scapes and stuff like that as far as the computing. I'm just going to stick with the ones that you probably know more, mostly. NVIDIA. AMD is over here playing catch up to that move. Look at that ticker. It's pulling back right now. What's another one in the AI space? Microsoft. This one, if this was a bailout, Microsoft was your 2008 government TARP. that's what Microsoft. Look at this. Look at how it just drifted up. That's it. No real pullback. Very weird. Okay, you're probably like, what is JD talking about? You see this? This is a trend. This is a pullback. This is the April bounce using an EMA. This thing just rode. I don't know. You know what? For giggles, let's do some research. Did they respect the 5 EMA? Yeah, probably the 5 EMA. Let's do something even more fun. Let's go with a 17. One of them I like as well. If you trailed it against your 17 and had your stop loss along here, kind of looks like my super trend that's happening here. Are y'all getting where I'm going with that? Like it's just a whole lot of junk here that I didn't like with Microsoft. So when we had this earnings pop up, I think a healthy pullback will be back to the 50 moving average. I want to see the 50 moving average get above this 500 level. That's what I would like to see. But again, anything can happen. Respect the market. We had put bearish divergence for almost 3 months. This is May all the way to August that we have not made a higher high in the oscillator. Maybe a nice little push to the downside again. We get to the zero line and then curl up. That's probably what I would like to see. So by him saying AI is bailing out most of the market, I agree, but I think part of this is going to create retail traders to think, oh, let me go pile into AI. Let's get a couple more that's in AI. IBM is already feeling the effects of people taking their money out of AI. This is the originator of Watson, which was one of the first AIs. Granted, we had other AIs with it, but they kind of mainstream and commercialized it. And you could kind of see yesterday's drop was just literally taking more money out of the market. I think I get the point. I don't even want to think of more. So AI has been bailing out, and that's what tech's been going. Is this a warning shot to everybody that now they're going to do a sector rotation, get out of AI, take some of the capital and the profits that they got from there and pour it into something that's a laggard? I would say possibly. Let's talk about some laggards. Let me go ahead and grab my other list. Where is my, not this one, spiders. All right, so let's talk about this. Let's really make this make sense. So let's talk about XLV, healthcare, right? Healthcare has been looking like this ever since August. I don't know if y'all remember what happened in August. That was the whole entire CrowdStrike junk that ended up messing up the market. First, they said it was Microsoft's fault, but it was really CrowdStrike that pushed that whole entire upgrade, and everything kind of dumped. I think people pulled their money out of healthcare, knowing that we were going into open enrollment, and then they took the money, put it back for open enrollment, and then pulled it right back for 2025. Especially, you could kind of see that peak right here around March, and then they poured into around April, hence the reason to drop. It's funny that this thing dropped roughly in March, just like tech. So I think they probably poured it right into here. This had an April base that has yet to break out, and I think they're slowly accumulating on all types of sectors other than tech right now, and they're going to start taking some of that money from tech. So just keep that in mind. XLV is healthcare. That's a good area. Your Johnson and Johnson's, your UNH. Well, UNH is kind of getting beat up. So HCA. What else we got? Eli Lilly. Eli Lilly's been getting beat up. Just keep an eye on that. Here's your discretionary. This is just like tech, and you can kind of see that's different than what we saw with healthcare. This one is your discretionary. This is where you get some of the stuff that is like your Teslas and everything else. It's kind of techish, but it's things that you don't normally would think that's a staple. It's the opposite of staple because there's one for consumer staples. So this is a nice little bounce with tech, but you can see it topped out. So no one's getting into discretionary, unlike technology, right? XLB is your materials. I think that's what I'm going to. Yeah, materials. So this is your materials. Has a nice little M pattern here. This is your copper, your gold, your silver, all these things. It's starting to show that materials. And actually, perfect example of that, Trump just recently went ahead and, of course, they're running their mouths, buy the rumors, sell the news. Again, that there's a major tariffs on copper. Hence the reason why copper has dropped off. I would pull a copper chart, but that's a whole nother conversation. That's for my futures, guys. We'll leave that alone for right now. Real estate has been stagnant. It's been sideways. Hence the reason why interest rates are going to be key and all that stuff. You want to chart that out. Here's your consumer staples. Nice solid base here. These are usually sideways because like grocery stores, Family Dollar, Dollar Tree, things that are required. Mondelez is in here for yours that loves Oreos. These are the sectors that they're probably going to look at. Energy. This one's going to probably have a nice little effect. Chemical Phillips. No, sorry. Chemical for energy. The nuclear. Everything else that's on that side. That's where this falls in. Not utilities. Get away from utilities. There's one specifically for utilities. Some of your oils are in here. This is all energy based. I think there's going to be something on clean energy. That's why this doesn't look like your CVX or anything like that. It looks more like a utility kind of sideways. Is because they're wedging this, and I think this is going to be your next rotation, especially with that gap. Here's your financial sector. This thing has been ripping JPM, PNC, and that's why it made its new highs. I think there's going to be some profit taking there. This one is industrial. I don't follow this as much, but you can kind of see we got a nice little solid pop here. This was probably based on the Build Back Better. Oh my God, I keep saying the wrong thing. Trump, why did he do BBBs? Big beautiful bill. They're probably getting into that position based on those parameters. Hence the reason why I had an April pop. Hopefully we can get some new roads because some of these roads are terrible. Utilities, this is a good place to kind of park for dividends and everything else. This is another one that's going to be probably key. And then the last one is communication. I think this has been a laggard for a long period of time. This is where you get your Disneys because they have ABC and ESPN, and your Comcast for NBC and everything else. If you do not have this list, I do suggest, since that's why I put this on the screen, have this list available. This will let you know what's going on in the sectors. It covers all the main sectors in the market. And if it's moving or it looks like a laggard, you might want to go ahead and check out the tickers that are in its space. All right. AI. I'm not saying that you're dead, but I'm just saying that you're probably just a little overheated and needs a pullback. So let's go ahead and get into earnings. So to this morning, we had a couple of earnings that is in place. Let's go ahead and get there. We had this is Thursday. We had Lynn. Now Lynn was when I was like charting materials. This is getting refreshed along the way. Industrial gases, so it'll probably be also in XLI as well. But it's kind of stagnant. Does pay dividends, but of course it's not great compared to its price. You can kind of see very choppy. These, when it comes down to companies like this, these are more for investments, and then you could kind of see it from higher time frame, like a weekly or even a monthly. You probably get a better stance on it because you're just waiting for these type of pops. But their earnings is expecting. Let's come back over to the daily. They were expecting 4.09, and they returned. Oh, that's not bad. That's in line. It's not a growth company, hence the reason why they pay dividends. You just got to be able to chart this properly. This would have been a good entry. MACD's down, stochastics down, MACD's down, stochastics down, MACD's down, stochastics down. As you can see the pattern, right? Looks like they're trying to hold the MACD, but we got a nice little pop here. And it's only based on the earnings, about $5. So if you caught it at 454 or any of these levels, you'll be happy. So I think this one is a solid ticker. Not going to go out of business anytime soon. CVX also had their earnings, and I know they're probably going to get affected with the fact that oil didn't really make a move. This is a weekly fair value gap that I put in, and I did warn people. I said it's going to be tough when they get there. I don't think it's going to get 50% of it. I think there's too many bears that exist here, and it's starting to follow suit. Not saying I want to short it because it is overheated, and there's a lot of bulls that bought into this area here, but I did have questions on energy based on the fact that we're going very electric overall. All right, and then the last one is an old name. I pulled this one out of the archives, Regeneron. This one has done a lot better than Moderna, but it did drop off of a cliff. This thing looks crazy over in 2024, roughly around August. They probably pulled their money out of this one as well. Maybe a patent, I think I was explaining on the last video, maybe a patent expired, whatever the reason. Either way, this ticker is around $500. So very curious on what this ticker is going to do going forward. They did find an extra 4.4 dollars per share. That's what EPS is for their shareholders, which is 50% increase. And they found an extra 380 million. If you tell me you've almost found an extra $500 million, and you're at the bottom right here, this is a solid discount for the most part. Only thing I'm waiting for is for it to kind of reverse its fate. And so far, it looks real solid. Actually, you know what? I need to put this on my watch list. Let's put you on the board. Let's get you over here. Put you on the board. Looks really, really good for a possible continuation. For Monday, Wayfair. I know this is an old name for y'all, right? Especially those that's been trading since the pandemic. But the community took a nice little trade on this. We kind of caught the pop from the 50 up into the 60, and it's a solid move. I'm just being honest with you. There is no reason, no way, no fashion or form for you to avoid a Wayfair. If you don't know, they got wrapped in scandal, kind of like UNH in a way, but a little bit more egregious. And this thing had dropped off of a cliff, but they found a way to use, and it's probably because they had so many customers that follows them. You're going positive. That's what you want to see. Their earnings, they're anticipating that's going to be positive. So this is a nice little guide in that regard. If they actually smash the earnings like they smashed it here, an extra 147%, this could be a nice little move in itself. It's kind of ran away for the most part, but might be for the monthly. I would say it needs to hold this $58, $60 level. Maybe consolidate a little bit. You already got a little bit of a pullback, so I think this could be some opportunities for you to get in. Just find a spot. But if we can get a nice little hold here, you're probably going to see Wayfair continue to the upside. Let me see how this weekly looks. It's pinned monthly. Monthly look like party just started. If we can break through this MACD, oh, I just noticed that that is a perfect morning star. Bang bang, keep our party going. Let's see how that holds. And the last one for next week is Palantir. This one gets government contracts, so this thing moves very similar to like a Boeing. You just can't really tell what's a good spot. So a lot of people invest into things like Palantir. Actually, Palantir is probably why Lockheed Martin looks like crap. Oh my God, this is this disturbing. When the company turns around and tells, "Hey, guess what? We're gonna find you $6 per share," and then out of nowhere they only found 1.46 and lost an extra $500 million. I don't care how many billions you have. This is not what I want to hear. That means you're spending money in places, maybe payroll costs increase, maybe shrinkage, whatever the reason is, you're not returning money to shareholders. They don't like that stuff. Hence the gap down, and it's struggling to get back up. I can't even imagine what the guidance looks like. If you start hearing that Lockheed Martin is getting rid of dividends, run. So I think companies like Palantir is getting investor money. Hence the reason why it's drifting up like this. I thought it was going to stop at like 150, but no, it's just continuing. It got bearish divergences all over the place. So I wouldn't say it's time to get into this one. But 13 cents per share, almost $1 billion. Maybe attract some people, because if they can get to $1 billion, then they could shave off some of the costs and kind of rebalance themselves. Maybe. So there's a lot of question marks in that one in itself. I think I want to see this on a monthly. Let's see this on a monthly. Yeah, just look. It's very, very toppy. But again, Boeing has tendencies of doing stuff like this, even with bad earnings. And unfortunately, Lockheed Martin doesn't get that same benefit. Let's try weekly. Let's see what the weekly looks like. 1 week. Yeah, I see bearish divergences. So just prepare for a possible pullback. I'm not saying I wanted to get down there, but I would say maybe 125. That probably after earnings drops, maybe 125. Get a nice little bounce off this order block that's sitting right here, and then it'll probably go for your 160s, 180s, maybe even 200s. I think that's probably a more of a healthier pullback, allowing the daily oscillator to kind of give you a nice little solid retracement. All right, so we kind of cover all of that. Let's look at some of the things that's going to be coming up on this month's earnings cycle. Some of the things that I watch. Now, I'm not going to cover all of them, of course. So we got Eli Lilly. They got a lot of questions that they got to address. This earnings better smash. Maybe new drugs in the pipeline. That's probably going to be very important for them. Maybe new sales on their Ozempic. Maybe some contracts. Something that can really put a squeeze to their competitors, because actually theirs is Mounjaro. Whichever it is. I know there's Ozempic, there's Mounjaro, whatever the case may be. Whatever there is to... Wait, hold on. Just reading this article. Eli Lilly's diabetic drug Mounjaro showed a 16% lower death rate and 8% reduced risk of major heart event in trials of over 13, potentially updating its labeling. Wait. People are dying off it? I can't take it. Okay. Sorry, I didn't know people. I knew people were getting sick off of it, but I didn't think people are dying. Listen, just and this is coming from me. Let me switch the screen. Let me do this with a straight face, so that way I can see I'm being very genuine. I'm not saying that you have to turn around and go to the gym, but if you have to take a drug to look like something that you're really not, I know people that does the Dominican plastic surgery, and they still keep the same eating habits. Do you know what happens when that happens? Guess what? You turn into a donut after. So if you have bad eating habits and then you're taking a drug to shortcut through, I'm just saying, I'm not trying to be a jerk about it, but let's just be real. You also have to change the habit. You gotta be, y'all making me go deep in my bag. Forget that. We're going to go deep into the freaking bag. You want to be these people that is these individuals that looks good, right? That's what you want to do, right? All right, cool. It's no problem. All right, here we go. So first, before you can be actually chart, get out the way, right? Before you become anything, you got to become the person that you want to be. So you're going to go ahead and take this Margiano. All right, cool. Go ahead and take the Margiano, but become the person that ends up being a healthy eater at the same time. So that way you don't have to take so much of a diabetic drug to go ahead and lose weight. Do what it takes to become that person. So that means you're not going into the gym per se, because again, you might not have to. Just change the eating habits and maybe do some light walking, and then you could keep the weight off or whatever. And then have that's the byproduct. You want to do all this and then you don't want to become anything to have what it is. Guess what? You don't protect what you have, you're going to lose it. So people are dying. You're probably overdosing on the freaking Margiano. That's probably what it is. Oh my God, I did not know people are dying over this thing. Whew. Sorry. Had to get that soliloquy out. I apologize. I got it off my chest. Eli Lilly to the dirt. No, I'm just joking. I'm joking. And this is why I can't do this live. That's why I've been doing recordings. Oh my God. Showed a 16% lower death rate. I don't even know what that means. If it's 1,000 people, so now 16% of that is what? Now 160 less people has died over. Oh my God. Anyways, okay, I'm done. All right, so Eli Lilly has their earnings, which is coming on Thursday, August 7th. This is going to be very key in the healthcare sector. Do they have other drugs in the pipeline that's going to go ahead and do other things other than weight loss? Because a lot of this move was built on they were the first ones to come up with their Margiano, or at least pivoted from a diabetic drug into a weight loss drug quietly, right? And now that they have competitors, hence the reason why there's some stagnation here. Question is, are they the market share dominance, or are they starting to really share that pie and the valuation is going to get priced into here? Do they have other drugs that's going to help them? We don't know. This is what this earnings call is going to probably dictate. They're going to say what they're in trials and everything else. Those are the things you want to hear. Spotify, this one had its earnings early. It normally has it in a second month. I think they squeezed it up because they knew that this was going to happen, right? I don't know where they go from here, but earnings is going to be in September if they can show that they can return money back to shareholders. Don't tell me you're going to give me $2 and then you're like, hey, can I borrow 50 cents? That is silly. That means you're not something I can invest to. All right, so just keep that in mind. Coinbase, I'm very curious about. Of course, they had their earnings early. Who had their earnings later? Let's see. So I think cybersecurity is, so if people are pivoting out of AI, you may want to pivot into cybersecurity. I would say pivot into cybersecurity, very low leverage. They have some AI component into their cybersecurity products, and some of the stuff are controlled with some type of AI scale. So I wouldn't just jump in and be like, oh, I'm out of AI, now I'm in cybersecurity. It's still tech. So I think a lot of things in tech has implemented or will plan to implement AI. So something like cybersecurity that has pulled back or shows some stagnation, I don't think the stagnation is over. I think they're going to go ahead and really start to pull back when people start to get out of tech. So just be careful with things like that. AMAT, I think they already had their earnings, did they? Nope, not yet. So this is going to be some of the semiconductors. Another reason for you to get away from tech. I'm curious about that, just like I'm curious about AMD. That's going to fall into play. QCOM had their earnings early. Had a little bit of a push to the downside. But this one is, I'm not going to say that they carry enough weight to tell you what the rest of semiconductors are going to do, but it just tells you people are already climbing out of semiconductors over there. Clorox, I think they already had theirs. Yeah, they already had theirs. Uber, I'm curious about Uber because they had a nice little spike up. If you don't know, I'm not a fan of Uber. They're a $12 billion company. Congratulations. But they're anticipating of giving 62 cents per share. This is questionable, especially that they came in here with 50. They shot it up to 80. I wonder if they pulled some of those revenues forward. You could kind of see we're putting in bearish divergences here. So I'm curious on how this earnings plays out. Upstart, I'm very curious about that. I did not like the pullback that they did towards the end of the day. I was looking for this to kind of take off, but this tells me that there's sellers that still exist here. I adjusted my positions accordingly, and it really looked like we was going to get into that $98, $99. It really did. But I was monitoring this, and I don't like when it does this. When you start to get spikes like this with these long wicks, it's letting me know that people are just there shorting the crap out of it. It could be because they're getting into short sales. It could be all types of reasons. Whatever the reason, I don't care. I just don't like what the chart's response is. Maybe I'll get back in if it comes back to the 50 moving average. Maybe if it comes back to an order block I feel comfortable with, maybe like 73 or something like that. But to be honest, this not looking good, especially when we got close to 87. This thing spiked up something really, really nice, and then you just gave it away. Not a fan. Not a fan. And then last one, let me give y'all DraftKings. I find DraftKings very interesting because normally after the seasons are over, it usually pulls back. And this thing barely pulled back, and we're going right into football season. And you already know people are going to start betting into sports. I won't be surprised they start betting into the preseasons. The preseasons are going to start, right? So just keep that in mind as you're looking at DraftKings. I'm looking for their earnings to price stay, of course. They need them to stay with this 1.42. I would like to see them grow this revenue, and then they could start trimming the fat and return some money to shareholders, and then I could go ahead and trade that. And then last, we're gonna recap just Meta. I think I'm just gonna stick with that. I would love to look at other ones, but I already did Microsoft, and they had earnings before. Now Meta, I was looking for it to hold 700. Everybody already knew that if you watched this show enough. I like the fact that we got above 740. That was an area I felt like it was going to have a tough time to reject. And right now, based on the parameters that it's on, we did close above all of that. And then now we're pulling back into the 767. I'll call it a break. Now that we've got the break, we need a retest. I want to see 741, 742, maybe even psychological 750 be tested and hold as support, and then we just do a beeline over to 800. I think this is the only one in tech and AI I have any confidence on, only because they have such a following. You found an extra 21% after generating an extra $2 billion. You're my friend. That's how I see it. And the chart already looks bullish, so I think other traders are starting to see that. Other investors are starting to see that, and that's going to probably give us a nice little bit of setup. So that said, I'm not saying pour your money right now because it's too far gone. I don't want you to just chase Meta, but if it can kind of form a nice little footing around that 750, you probably can get a nice little day trade. But if you're going to try to invest into it, wait for a deeper pullback or wait for a stronger structure. All right, that's about it. That is pretty much our show today. I know I came here really, really early. Like I said, I couldn't get the edit, so I just wanted to make sure people are getting the information before 8 a.m. catches them. It's fun doing this. I really do have fun with y'all. Don't forget to hit the like, subscribe, and the bell button. It really helps that algorithm with YouTube, and it really helps this channel. I'm close to 500. The goal is to get to 500 before this year is out, so share it to your friends and family. Charts, the discounts are out. I'm going to have to update the description, but discounts are done. If you have trouble with charting, you can wait for the next discount. I do a lot of charting on here. Wait for it to be free. You know what I'm saying? That's just multiple ways of doing that. But proper trading plan, proper charting. If you have struggles with that, by all means, you can click the link down below. I'll help you out with that. And last but not least, one-on-ones will be back. I just got to get through the school session. Kids are going to start up. I got to give myself a little bit of break. I got to start thinking of some ideas on how to speed up these recordings and get them prepared for you. My goal is to get them released by midnight the night before. and get y'all prepared for the next day. That way, those that follow me over in London, those that follow me in Canada already has the information and it's already dissected so you can plan properly. So that said, thank you very much. I appreciate y'all. Y'all have a great day. See y'all.